Hey, welcome back to my live stream. It's great to have you. Thanks for joining. And it looks like today we experienced a little bit of a down day, and you got to have those once in a while because what goes up is going to keep going up, but we're going to have a couple pullbacks along the way. And today was a pretty good pullback. It was a pretty nice pullback. Tech stocks gave up a little bit today. Um, and I think it kind of maybe was a little bit of a notice that, hey, maybe January is going to be a month where maybe January, February, where if we have any negative surprises, the market's going to give up gains. You could see that today. There was some sell-offs in some of these high-priced stocks, and maybe there's more of that to come. I'm not complaining because for 2 years we've been on an upward market, so that's where we're at. If you're joining, thank you so much. Let me know, what stocks would you like to talk about? Let me know in the chat. What do you want to talk about? What do you think of today? Was it a little extreme, or was it something that was overdue? If you like what you're hearing, consider being a part of our community as a paid member. You can join us on the weekends when we talk about stocks, we workshop, and we just get better as investors. I lead those calls, and it would be great to have you. Consider being a paid member, and you can find more details in the description of the live stream or just about any video I put out there. And ACAP Investing, great to have you from Florida. It is great to have you. Thanks for joining. And consider joining us on the Discord. We oftentimes kind of keep track of the community through Discord. I'm on it every day, not 12 hours a day, but as I can, I get on there and see what people are commenting about and provide responses and my content when possible. So if you would like to join us on Discord, it'd be great to have you. So the market did what it did today. Looks like the NASDAQ sold off by about 1.5%. And it seemed like at least the comments I was hearing, first, it wasn't a high volume sell-off, but it was kind of like, yeah, expected. Stocks are a little expensive, so it's not surprising somebody. I'm not hearing a lot of shock and surprise about, how the sell-off occurred, which is, I think, healthy. I mean, we can't have a market that just keeps going up forever. S&P 1.1%. And a good part of it is because those really expensive stocks did sell off today. So that's where you felt a lot of it. And so did the small caps. So across the board, it sold off. It's beginning to feel like, those value stocks that are a little more Dow based, they haven't been, performing anywhere near like technology stocks, but maybe they're a good thing to have as a hedge on those tech stocks. And we'll see how we close out the year. We have 2 more days of trading left in the month of December, and then we call it a year and we move on to 2025. And I think having those value stocks in 2025 early in the year is going to be a good idea for me. So I'm glad I've got them. What's going on in crypto land? Well, Bitcoin also decided to go down a bit, and it's down. Ethereum, it went up a little bit just now. Interesting. Let's try that again. Yeah, it went up a little bit. Well, that's good. I guess it reset because this is a measure. If it compares 24 hours ago to now, has it gone up or down? So it's just up a little bit compared to 1 day ago. The one stock that, I did a video on it in the early stream session, as well as a video that I published in my channel. And, NVIDIA since December 5th, it's given up about 5.5%. And this is the stock that is going to move the semiconductor space and the whole AI space. If NVIDIA has a tough time at the beginning of the year, first quarter, first 2 quarters, it really brings down a lot of things with it. A lot of things are really being, bid up. And this is the one that is, I think, in a lot of ways, certainly worth, what, they've been a real growing company, but they may be a little overpriced, maybe by about $1 trillion. Um, and if they start to show that, hey, we're not going to be on this incredible growth rate, and we're actually going to see that after the infrastructure gets built, maybe we're going to see a decrease in revenues. Holy smokes, you're going to see this stock really, really go down, and it's going to take down a space that's kind of been riding their coattails for some time. So we'll see what happens. This is really interesting to monitor. And as I showed earlier, and I'll show it again, really, I began to really question NVIDIA and their valuation around this point. And you can actually about this point. And you can watch my videos and kind of see that, yeah, that's when I started questioning it. And it still went up 19% from there. But I would say that it stopped the pitch of their incline stopped, and it's been somewhat sideways since then. And if it starts really coming down, it's had a couple low points along the way. That's going to be the story. That is going to really move the market. So we will see. That'll be interesting to watch, and I'll be tuned in to see what happens in technology next year. I think that healthcare, biotech, and some spots, I mean, we've been seeing insurance companies that are really valued well. The fundamentals look phenomenal. And in the stream on this session, I thought I could go over probably the best tips that I heard throughout the week. And I've got a list of them here, so I could share that with you guys, kind of look at, kind of do the highlights, kind of ESPN style. Hey, all the games have been played. Let me show you the highlights. So that'll be one segment to the live stream. But, you guys tell me if you'd like to look at some stocks. Tell me in the chat which stocks you'd like to look at. I'd be happy to jump on those. And looks like ACAP investing, ODF goods. So ODFL goods still have more move from point A to point P. Let's take a look. Old Dominion. So these guys are a logistics company. They do trucking. Yeah, it depends what you're trying to accomplish. And, I've gotten to know you a little bit, and I'll tell you for what type of investor I would think this is a pretty good idea for, and so forth. So you're right that, freight has to be moved. So if we have commerce, Old Dominion's going to move it. And if we look at this stock for the last 5 years, it's done great, 187%, especially when we had those supply chain issues. We had to expedite parts and so forth from one end of the country to the other side. We saw them do really well. But the 1 year is telling us that, hey, maybe freight isn't going to be as robust as it was before. And there's been a really strong sell-off. So let's put that on hold for a little bit. Look at their fundamentals. Then I'll come back, share with you what I think might happen in this space. Kind of my best estimate as to what's going to happen. And then for what type of investor I think this is a really good stock. So not too big of a market cap, so that's good. Revenue is almost $6 billion. Okay. And their PE is at 31. It's a little high for their industry. This is an industrial, this is a logistics or a freight company. So that is a little high, I would say. Price target, analysts are saying it's not a buy, but it is a little discounted. All right, let's take a look at their financials. So in the trailing 12 months, they're up just a little bit. In 2023, see, they saw this big jump when we had supply chain constraints a couple of years ago, when we had to expedite things. They were making really good rates, and they had a lot of volumes of freight to haul on their trucks. So they did great. But then they had kind of a contraction year in 2023. And if we look at the quarterly, they had the contraction quarters, and then they had a little bit of growth, Q1, Q2, and then they were back to having a contraction, a small one, in the most recent quarter that closed. So this is looking a little bit weak. It's not a flourishing business. Flourishing was back here. And if you bought back here, that's when you made the money. You saw the stock appreciate. All right, so we have 5.9 billion in revenue. Let's take a look at their margins, see what kind of money they make in this industry. 40%, that's good. That's good. These guys are freight forwarding, so they have to pay for their trucks, their drivers, and insurances and that kind of thing. So 40% is pretty good. Free cash flow looks excellent, almost 1 billion. They're not growing, so that's kind of my biggest worry. And if I look at their forecast, 16 analysts cover this company, which is good. That way we have 16 different opinions on their growth and what's going to happen. So for 2025, revenue is expected to grow at about 5%. That's pretty good. And then it's going to grow at 10% and 10%. That's fairly good. So I think that's a green flag, and profits are going to go up a little bit. So their profits are going to expand and revenue is going to expand. They're doing about $1 billion in free cash flow. And based on a growth rate where they're at of 5% or 10%, I think these guys are worth probably about 20 billion in market cap. And right now they're selling at 38 billion. So free cash flow is not going to get us to a valuation of this type because they're not growing really fast. So I can't give them a big multiple on cash flow. And their gross margins are 40%, which is good for their industry, but they're not like a software company that's at 80, 90%. And the future is a little uncertain. Now, the economy is not booming, but we're not in recession, and we're kind of in a slow growth period. Supply chains are fine. There's no expediting that needs to be done. As we went through the holiday season, I think the holiday season was fine, but again, nothing that communicates, hey, there's a boom going on. Boy, we got things selling off the shelves, and there's a lot of hot products, or there's a supply chain constraint of some sort. So I'm not seeing a very a booming economy for Old Dominion next year. This is potentially this stock, and it has had a bad year, right? It went down about 13.35%. And you see that recently they really sold off. Now they're going to announce on January 29th, which is around the corner. So in roughly about a month, they're going to be announcing their earnings. And they'll tell us what's going on, but I just don't see a lot of upside in this stock right now. I think it'd be wise to wait maybe 6 months and then maybe make a move on this. Or maybe not make a move on this if we have information that tells us, well, the business is not as good as I thought. What type of investor do I think of when Old Dominion? Somebody who just wants to see their money, doesn't want a lot of risk, a lot of volatility, and wants to see modest growth. And they have a small dividend, so it's not exactly a dividend stock at 0.58%. For investors that are, call it 40 years and younger, I putting myself in that situation, I'd want stocks that are going to grow faster. Biotech, software, semiconductor, getting into them in the right times, not force my way into it and overpay. But I would try to get into those types of stocks. Rather than going into Old Dominion, I would park my money in money markets are doing quite well. I think mine's doing 4.5%, and that's pretty low risk. What's the risk of having your money in cash, right? You get 4%. That's pretty good. And you don't wake up a year later and your stock is worth 20% less, as an example. So Those are my comments on Old Dominion. I would not be buying the stock. I don't think there's a lot of value there. Just remember, you have thousands of stocks to pick from. There's no rule that says you have to buy logistics companies within the industrial sector. No, you can pick the ones that you believe in and the ones that you think are going to do really well. Um, so you think their balance sheet looks good? Let's take a look at their balance sheet. So cash, 74 million. Yeah, they pretty much don't have any debt, which is very good. Yeah, considering they have trucks and logistics centers, right, where they move freight. Sometimes you have to cross dock freight, and when you move a freight from, let's say, California to New York, you will probably take the freight from here, let's say Kansas City, and then kind of cross dock it into another truck, and then it gets further taken closer to New York. It might be on 3 different trucks before it gets to New York. That's the way that they move their freight. So yeah, I think the balance sheet is really strong. I think it's a good company, but they benefited from those supply chain constraints, and I think those days are behind us. And companies have learned their lesson. As I look at companies that carry inventory, they're carrying more inventory, and one of the reasons is, as we saw the election happen, the candidate that won, he made it clear that, hey, he's going to use tariffs as a tool to get what he needs or influence our trading partners. And if that's the case, then companies built inventories up, and that's actually going to make this company's business less active, and there isn't going to be any expediting and so forth in this industry. So I think that's what's going to happen in 2025 potentially. So that you can watch it and see what happens. So hopefully those comments were interesting to you. W3LZY. Thanks for joining. EQV. EQV. So EQV Ventures Acquisition Corp focuses on effecting a merger, share exchange, asset acquisition, share purchase, reorganization, or similar business combination with one or more businesses. The company was incorporated in 2024, based in Park City, Utah. So this is a really small company. No revenue. Am I looking at the right one? EQV, yeah. So these guys are not producing any revenue yet. You just buy into these guys. I wouldn't be able to provide much. So this is going to be a special purpose acquisition company, a SPAC. Yeah. So I wouldn't have much of an opinion here. I'd love to hear yours. Would you be interested in investing in a SPAC? And put some details on why. Is there something here that you know of that they're going to do that is really exciting? It's interesting they raised $444 million from investors without really the investors knowing, what am I going to get out of it? What kind of company am I going to own? They don't know that. So we'll see. All right. Since I don't have any other suggestions or requests out there, I thought I'd take a look at the most valuable stocks and what they did today. Apple went down 1.3%, not too bad. Nvidia went down 2%, Microsoft down. So everything was down. Meta held its own. I'm curious to see how Meta's doing after hours, because I heard that the president-elect has socialized to the Supreme Court that he'd like to see the ban on TikTok kind of be put on ice, like, hey, don't move on that law, which would benefit TikTok, but it's kind of Meta rallies whenever you say, or when the idea of banning TikTok was real, Meta flourished because they would be the recipient. They would be the short form video company, as well as YouTube on Google Alphabet. So if TikTok continues, then Meta will have to compete against them, which they do with Instagram, and they do quite well. All right. Um, Going down the list, it looks like it was red on the screen. We have to go way down to Toyota before we get to some green. So it was clearly a sell-off day where investors were taking profits. And you may see this in January because profit taking in the new year is quite popular. That way you postponed your tax bill. And we'll see what happens in January. All right, so that's that. And let me take a look at the sectors. So when we look at sectors, energy was the only one that was in the green today. And like Chevron was, I think, up a little bit or flat. So that's good. It hasn't had a good year. So to have a good day is pretty good news. And it's had a terrible month. So everything else was red. The worst being consumer discretionary, and then technology was pretty bad. So that's how the day played out. All right, so let's talk about, and if you joined recently, and if you have a stock you'd like to talk about, please put it in the chat. We'll go over it. So as mentioned, I wanted to kind of highlight some of the stocks that came up that I thought looked really good from a valuation perspective. So I'm calling this kind of like the top tips of the week. And the first one is ASPN, Aspen Aerogels, and these guys they make a product that helps. And where they're really growing is they do the insulation in cars that are electric vehicles. They insulate the cabin from the batteries. I think it's a safety requirement, and they're growing very fast because car manufacturers are using their product to do that. So their growth is really good. It is considered a building products and equipment company, an industrial. It's a very small cap at 1 billion. For the 1 year, it's down 19%. For the 5 year, it's up 50%. You can see that it was really rallying. 21, it came down. Now it's done well, like coming out of, it's done okay, I guess, for the last 2 years. But it has interesting growth. You see the growth is really high. Revenue is good. Their margins look good, and they're actually expanding. So this company looked interesting, and this was one of the tips that I got this week. I can't remember who suggested it, but whoever did, good job. And this is a really unique, interesting idea on a company. I think they're so small, they're probably not being covered by a lot of analysts. So we might have a timing advantage against the market. 10 analysts cover it. They believe it's discounted by 148%. Holy smokes. That is a good discount. And that's because their growth is really good. So I'm going to dissect this one and go through it, go through the financials, and probably record a video on it. So that was Aspen. Looked really good. So thanks to the attendee that provided that suggestion. The next stock is Oscar Health. And Oscar Health provides health insurance for small and individuals that need healthcare insurance. And I think it's a pretty good space, probably underserved. The big giant companies, they like serving big employers. They have big employer customers. These guys are 3.4 billion in revenue, nice small cap. Revenue's looking really good. P's a little high in the current year, but next year looks really good. When we look at their growth, the growth looks excellent. 51% growth. Now, what's their stock been doing for the last year? It's up 49%, but you can see this pullback that it's had recently. So that looks interesting. Over the 5-year, it's actually down. It IPO'd at a high price. But now it's, at certain moments, this thing's really rallied. And I know that healthcare as a space has really had a bad month, to say the least. And that might be the reason why this company, even though it has good fundamentals, has been brought down. And bad news is going to go away, especially since it's not directly associated to Oscar. It's a pretty good little tip here. So thanks to the person who brought this one up. The revenue looks phenomenal, the growth. And let's take a look at the free cash flow, 900 million. Now it's been inconsistent, but that's a really nice number. If I looked at a company like this, I think it's potentially worth 20, $30 billion. Well, that's a lot higher than 3.4 billion. So this one's going to be on my watch list, and it's going to be on my weekend homework list to really analyze. But this was a really good tip of the week. So thanks to the user or the attendee that put that one up there. So Bad Omen, good to see you, man. Did something happen with Toyota? I don't know, but let's take a look. We'll get back to the tips. We're through 2 out of 5 tips of the week. So we'll come back to the tip list in a little bit. So Toyota. So these guys, they have a really high value. This is like, I think, the second most valuable car company behind Tesla. And these guys are the real deal. These guys make good cars. For the past year, they were riding really high. I remember seeing this stock maybe about a year ago, and it was doing great, but it's really settled down. Now, what happened this past week that made this stock flourish? So, it really popped up about 14.5% since December 19th. Some of the stories are out there. So it plans to raise its return on equity. Okay. So they plan to double in profitability. Okay. Now, the one thing I would say is there was a merger between Nissan and Honda, and I didn't go deep into it because I don't like investing in car companies. But what I did read from headlines and listening to stories was Nissan is in trouble. And it's more of a survival move for them. If they merge with Honda, then they're going to have, I think, more capital, and it'll be easier for them to compete against Toyota and everybody else. And that may have been kind of a sign of confidence that, hey, Toyota is really good. Their cars are good. They keep growing, and it puts stress on their competitors. Their competitors are not as good as Toyota. These guys are a monster company. This is in Japanese yen, but they're still growing. They had some down years because of COVID, but they are still growing, and they're growing at nice rates. So really, really nice company. I thought I had missed on this stock, but I don't feel as bad anymore because over the 1 year, it's only up 10%. And that's with this latest move. For a while, it would have felt like pretty crummy if the stock sold off by like 33%. That's at a point throughout the year. But studying the 5-year, I think this is when I was seeing the stock. I'm like, wow, man, that's a nice move for Toyota. Look at that, up 93% in, call it, a year and a half. So it's gone up, down, up, down. The car business is tough, and Toyota is as good of a company, period. It's just the industry, I don't like it. And I get to choose what stocks I get to invest in. And I choose not to invest in car companies. It's just too difficult of an industry. I'd rather invest in Meta. Meta, super profitable. They dominate. They just keep getting bigger. AI is going to be an opportunity for them. It's like, okay, I'll put more money in Meta, put more money in Google Alphabet, and so forth. So, yeah, I guess that's what's going on at Toyota. And what do you think, Bad Omen? Right. So back to the tip hotline for stocks. And the next one on the list is HG. This was a tip that came in. Hamilton Insurance, another insurance company. And insurance has been working. I keep saying that because we keep seeing insurance companies and their stocks are going up, and you see their fundamentals, their revenues are going up, they're really profitable, they generate a lot of cash. It's like, all right, insurance is working. And these guys, HG, they're up 28% for the year. They haven't been around that long. They've IPO'd recently. So this is a young company, $1.9 billion market cap. Their revenue is higher than that. Look at their forward PE, 5.6. That is super low. When you look at their growth rate, 69%. What is going on, man? Let's look at the quarterly. Latest quarter grew 31%. Before that, 63, 103. Those are pretty astounding growth rates. So that really was impressive. And when we look at their profit margins, since they are insurance, 30%. It's an insurance company. Cash flows there. And if you look at this cash flow and based on that growth rate, this could have like a $15 billion valuation at some point, and they're only at 1.9 billion. So this was a really good tip. And I'm gonna look deeper into this one, but see, there's some stocks out there, and it looks like the small caps is where we're finding some really good fundamentals, where the fundamentals look really good. Growth is there, and certain sectors and industries like semiconductor, it's really hard to find discounted companies because it's so red hot. Everybody wants in. Well, here in insurance, it's proven to be a winner. If you look at Progressive, big winner. Allstate, big winner. So we'll see where this one goes. Looks like I'm getting some comments on HG. So let me turn my attention to those. HG could be down to $16. You think it could come down further? So it's up to 1868. Could be, but I'm seeing fundamentals that are really good. If this business just executes from this point, keeps growing at, let's say, 30%, this PE is going to change. If you're growing at 30%, your PE should be at a minimum 18. The company will be acknowledged as a growing company. So there you have it. Pretty good little insurance company. We'll see where that goes. And yeah, so JG, Buffett loves insurance. He owns Geico, and he's buying into Chubb. So you're absolutely right. It's one of his favorite industries. So no dividend, but I don't care about dividends. I'd rather see my Meta stock go up 300% and pay me no dividend. They pay a tiny dividend. Pay me no dividend. As opposed to pay me a 6% dividend and the stock goes down 30%. Easy math. It's like, hey, appreciate your stock price. I don't really care about the dividend. And even Warren Buffett says dividends are tax inefficient. He'd rather see stock buybacks, and he'd rather see that stock price go up in value. But that's my opinion. Totally respect some people like dividends. So, all right, let me catch up on comments, and we'll get back to the tip list, the tip hotline. You don't invest in autos or oil. No, I've invested in oil for a long time, and I keep telling myself I got to kick the habit. It's like smoking. And I'm thinking of selling some of my Chevron stock in 2025. We'll see. I don't quite hate oil like I, kind of try to stay away from autos, because when oil prices are high, oil companies make money like big time. Like politicians would like to make it illegal to make that kind of money. But when oil prices are down, they're just okay. They're like, whatever. It's just a value stock. All right, back to the tip pot line. The next one is a little bit on the risky side, but it looked great. And it's a Bitcoin miner, CleanSpark. Now, Bitcoin has been doing really well for a year, right? And I know Bitcoin isn't for everybody, so no worries if you're like, hey, you know what? I don't touch Bitcoin. I respect it. No problem. Bitcoin's up 121% in 1 year, which means, the price, a year ago was $42 per coin. Now you have to pay $94,000 for the same coin. Well, a Bitcoin miner is kind of like an oil company. When they mine that Bitcoin, they get twice the value. But when we look at their stock price, they haven't doubled in value. They actually went down. Well, I looked into it and the company's operated well. They continue to grow. It seems like they're doing the right things. They're just, they could be misunderstood. It's like, why are these guys not priced higher? And what I showed in a live stream probably 2 days ago is that the financial statements for a Bitcoin miner you have to understand them, because Bitcoin's a brand new thing. And the way that generally accounting principles work is they don't give companies credit for earning Bitcoin. And therefore the free cash flow that you're seeing doesn't include the Bitcoin they earn. But when I put that back in, they're actually generating free cash flow. So this company ended up being valued based on my free cash flow projections and earnings per share, much higher than 2.9 billion. So this was a really good tip by one of the attendees. And that's already on my watch list, and I'm going to continue to watch it. Moving on to the next tip provided by the community that attends these live streams. Oddity Tech operates a consumer tech company that builds digital-first brands for beauty and wellness industries. So this is like women create their profile, maybe create their what's the word I'm looking for? Avatar. You know what I mean? Like you create your digital self, and then you can then pick and get advice on what type of beauty products you ought to be using. So that was really interesting, and it kind of makes sense. I mean, we're in the year 2024, soon to be 25. AI is all the thing. So it's like, yeah, why wouldn't ladies, have a digital self, and then you can have, and even men, I'm sure men wear makeup. Then you can have, software and maybe an AI platform recommends certain beauty products. So I haven't talked to my wife about it. I plan to talk to her about this. I'd love to get her opinion on it. So the company is doing something innovative in a space and could become really, really valuable. They are growing nicely. They provide a platform, a technology, and maybe they can make that platform really successful and then license it to the big, cosmetic companies. And that way they can have a better relationship with their customer and keep customers longer. So that might be exciting. Their gross margins are really good, 71.85. They get to make a lot of money. They're free cash flow positive. A lot of good stuff. I would have never found this company on my own. I don't wear makeup. This came up and we analyzed it. I'm like, what the heck am I looking at? And I had to look at their website for a while. Yeah, the lady had tattoos, but there's tattoos everywhere nowadays, right? I was watching the halftime show for the game on Christmas, the second game between the Ravens and the Texans. Beyonce had her concert, and um, Post Malone, he sang with Beyonce, and that dude's got face tattoos, but he's a super successful, uh, sought after guy. So what do I know? Maybe I should get a few face tattoos. Maybe that'll get me a couple more views and a couple more subscribers. So, Oddity, a tech company doing something really innovative. Their fundamentals look good. This was a good tip. Very good tip of the week. So, this is a fun one to keep an eye on. I wanted to talk to my wife about this one. It reminds me that I need to talk to her and get her opinion on this company. And the last tip that I'll go over is ADY. And I got an interesting deja vu kind of story. So this company is a financial technology company. They do a payment platform, and they're headquartered in the Netherlands. Okay, got it. So they do quite well in Europe, as you would expect, but they're here in the U.S. as well. I think they're in North America, Asia, Latin America, and I'm actually wearing one of the T-shirts I bought. So I analyzed them, and I think the next day I I'm in this sneaker store, and I bought this T-shirt and another one, and they had this equipment, Adyen, and that's what I paid with. And I'm like, oh, I guess I'm not going to notice this brand because I analyzed the company. So hey, man, they took my credit card on. When did I go to that sneaker shop? I think I went there on Tuesday, and made my payment on this platform. But these guys are fintech. They're like PayPal. They're like Block, but they're out of the Netherlands. And the Netherlands has a lot of technology talent. A lot of software gets developed there. It's a pretty solid country when it comes to technology. And when we look at the fundamentals of this company, it's a $47 billion, and I think this is euro, but this is in dollars. Euros and dollars are almost 1 to 1, so no biggie. So that's a pretty sought after stock. It's 2 billion. I like their diversification, probably doing quite well in Europe. You know, the market for tourism in Europe's just been incredible. I went to Italy in 2023. This past summer was kind of busy. We didn't get a chance to travel, but we went to Italy, I guess about a year and a half ago. We had a great time, and it was packed everywhere we went. But you see their growth, revenue growth is phenomenal. Now, this is a pretty good sized company, right? 1.8 billion. And they're providing or producing free cash flow, and their margins are really good, 62%. So solid company, good margins, good cash flow. I'd value the company maybe up to 60 billion. And it seems like a very known commodity. Not a bad idea if I'm looking to diversify into Europe a bit. I don't think I own one stock that has exposure to Europe. So this one was a really nice tip by somebody who attended the live stream. So looks like 6 really good tip stocks. I mean, we probably covered 50 different stocks. So these are the ones that caught my eye. And I appreciate every stock that comes up in the live stream so we can take a look at it. And, I like making money in places that maybe not everybody thinks about. And I can't think of everything. So it's cool to have a live stream and listen to your ideas. Take a look at them. And I was in the payments industry for 25 years. Never heard of them. Well, they're pretty big. I showed you the revenue, and they're $47 billion market cap company. That's pretty good size market cap. So so you don't buy any stock with 5 letters. Doesn't come up on FinViz. Well, what is FinViz? All right. Never used it, but all right. So those are the stock tips. Let me get back to the comments. I think I missed one or two. So if I'm going over stocks tomorrow, so tomorrow we're going to have um, a paid investor conference call at 9:30 Pacific, and it's going to go for maybe an hour, hour and a half, and that's what time the call is going to start. I'm not going to do a live stream like what you're watching right now. And then on Sunday, we're going to have a paid investor community conference call at 9 a.m. Pacific. So that's what the times are for the weekend. And then I'll try to come back on Monday, do some streams as well. But that's kind of like what I plan to do. Good to see you, Michael Anthony. I know you've been on several of these, so I appreciate it. Real Mexican Joker. Hey, my friend told me you're getting face tattoos. All right. Yeah. That's awesome. Cool. Yeah, I guess that would make me different. I don't think I know of any stock analyst that has a YouTube video or any of the famous like investors that has a face tattoo. So I guess I could be different, but I'm probably gonna have to pass on that one. Not willing to go that far. All right, so we went over the stock tips. Any other request out there before we shut this down? Looks like we have 17 people on the live stream. That is really good. Thanks for joining me on a Friday night. It is nearing 8 p.m. on the East Coast. It is nearing 5 p.m. on the West Coast. And I appreciate you joining, spending a little bit of your evening with me. Hopefully, the one thing I think we still ended the week in the positive. If we look at the last 5 days, yeah, the week was still positive 2% because we had really good Tuesday and Monday. So we kind of built up some momentum, had Christmas Day, and then came back and we sold off today. So we had a pretty strong sell-off day, but we had 2 good up days to begin the week. So we still made it out in the positive, but I'm sure people are thinking maybe the market's telling us that it's going to start going down. We'll see if it happens. If Monday and Tuesday we see down days, I'm sure people are going to be nervous about the beginning of January. CPB, excuse me. So what is CPB? Campbell's. All right, this is a value stock. This is a consumer staple stock. These guys have been around forever, and it's a consumer staple. $12.4 billion market cap, revenue $9.9 billion, PE 22, forward P of 13. What's it done for a year? It's performed poorly. It's down 2.7, while the rest of the market was up big time. The S&P was down up 25%. The NASDAQ was up 33%. So stocks like these are easy to understand. I mean, as a boy, and even I've got kids, so yeah, we got Campbell products and we're eating them, and it's easy to understand the company. But it's one thing to recognize a brand, but it's more important to recognize where there's value. And companies like these are not great investments. Retail investors like owning these because they understand them and they get lured by that dividend. Oh, but it has a 3.7% dividend. Yeah, but once you see the loss that you had for the year, you barely made 1%. Meanwhile, most stocks in the S&P were up 20%. So you fell way behind. And over the last 5 years, the NASDAQ has more than doubled. The S&P has doubled in value. Meanwhile, you can add up this dividend, and over 5 years, maybe you're up 18% on the dividend. You minus this 14.5. So you made 3% while the rest of the market doubled their investment. So if you put $10,000 in Campbell Soup 5 years ago, you'd be like, well, this sucks. I got less than $10,000 today. If I would have put it in the S&P on an ETF, I would have doubled that money, and I would have $20,000 in 5 years. If I would have put it in a NASDAQ ETF, I'd have more like $23,000. And that's why I don't touch many stocks that are consumer staples. Consumer staple stocks I'd rather go into a bond. If you really like dividends, bonds pay a better dividend, and they hold their value as opposed to this one losing value. So I don't like consumer staples because what I hope is people that come to my channel, you're looking to grow your knowledge. You're looking to be a better investor, a more advanced investor. And I'm going to be consistent in the fact that, I would not, especially for a younger investor under 40, I would not like to see investors invest in this category because you're going to fall way behind. It's better to take a chance and buy a selection of stocks that are growth stocks. A couple of them are going to be winners. You're probably going to have a loser or two, but then the winners are just going to do so well, like Robinhood in 1 year up 200%. Well, that grows pretty nice, right? You put that 10 grand in, a year later, it's worth 30 grand. That's what I'm talking about. So I stay away from consumer staples. And on this one here, this company is growing. But when we look at the other fundamentals, like what's their gross profit all about? Gross margin's pretty good, 31%. And free cash flow is good. This is a value stock. But as I showed you from the appreciation, even though these guys are operated really well, the employees work really hard, it's just a really old business that's undesirable. So I don't invest in these. And, the evidence of why is here. This is what they do. I'd rather see somebody try to find the next stock that looks more like this, up 54%, up, over the last 2 years is more than doubled in value. Even though it's a risky stock, even though it's kind of an unusual industry, this has grown to be worth more than Campbell Soup, even though they don't have anywhere near the revenue that Campbell Soup has. That's a lot of soup cans. Double the revenue. It's worth $12 billion. Half as much revenue, it's worth $66 billion. It's growth, it's industry, it's buying in the right industry, it's buying the right growth companies. All right. That too early, most people sleep in on weekend. And Michael Anthony, are you on the West Coast? Yeah, you might be right. I just, on weekends, afternoons and evenings, man, I'm out with my wife and having fun. So that's when I do the investor calls, and I'll ask the community if they want to change it to the afternoon. I'm cool changing it. But that's when they are. Of course, if you're a paid member, I'll put this up here, we could communicate. You can email me. I've done one-off calls with investors. I make myself available to this community if the time on the weekends doesn't work for you. So we went over Campbell Soup. HLF rebounding like I knew it would. Herbalife. I think you brought this up. I remember talking about Herbalife. Down 56%. Up. Well, what's the rebound? Let's take a look at Google because it gives me a better chart. Okay. Up 6.5%. Okay, cool. It's just, I'm just going to tell you how I feel about it. This is like what's the term is bottom fishing. You're just fishing for a stock. And I get it's $6.70. Man, if this thing goes up to $10, that's a big gain. I get that. And the fundamentals didn't look bad, but it's just a business that's not very desirable by many. So I think this could give you maybe a short-term win. I would encourage you to have a really good exit plan. And we'll see what happens. But you'll be laughing at me if it hits like $30 a share, and then you can come back. And I told you Herbalife was going to get $30. But in all seriousness, if you can grow your skill set in finding, like we were looking at these quality companies, I should say these interesting companies, they're growing, they're in industries like health, they're in industries like these guys are doing insulation for EVs. If you can grow your skill set to find these companies and make it a habit, like you find 2 or 3 that double on you quickly in a year or 2, that's where you make money. And then you build that skill and knowledge base where you just start kicking ass, making money year after year, loving life, building, a nice portfolio. So that's what I'm trying to do. And that's what I encourage you to think about. Herbalife is not my kind of company. I hope you make money at it, but this is more of a depressed stock, obviously. Okay. What are some stocks you see promise in for 2025? So I just showed you 6 ideas. You got to do your own homework. I could tell you about some of the stocks that I am buying. I think that could tell you where my head's at. I'm buying into Mercado Libre. I'm buying into Amazon. I'm buying into Robinhood, Coinbase, Chubb. I'm buying quickly into Chubb, Citigroup, Catalyst Pharma, United Therapeutics. I'm beginning to buy into Lam Research very quickly, Qualcomm, Adobe. Do your own homework. This isn't financial advice, but I'm answering your question of what do I plan to buy in 2025? And I did raise some cash. I sold some positions earlier this month. I've got cash to invest. I'm expecting some kind of pullback here in 2025. We'll see if it happens. Back to the lady with the tattoos. And man, I'm seeing tattoos everywhere, like movie stars, everywhere. You can buy CAG. Conagra. It's a food company. And you think it's going to bounce, huh? $13 billion market cap, almost $12 billion in revenue. P is a little high in the current year, but it's going to drop. It's discounted. This is one of those staple stocks. Okay. And it's down 18% over the 5-year. So if it bounced, maybe, you have a short-term win, but I'm going to go back to my advice to the community is grow your, if you're going to grow your skill set on how to find stocks that are proven to be limited value. Okay. Now, Conagra Foods makes food. Everybody needs food. So I don't want to say they're not needed. But what I would say is these guys do 12 billion in revenue. Okay. Now let's take a look at our friends over at DocuSign. DocuSign is a software company. They do less than $3 billion of revenue, and they're worth more than Conagra Brands. And they've been around for like 20 years. Conagra Brands has been around for 100 years. And these guys are having a terrific year. And these guys are going to be worth more money in a year. They're going to be worth more money in 5 years. Learn how to find DocuSign when it's depressed in price. And you could see that this stock, because I know you were looking at Conagra Brands to bounce, right? Talk about a bounce. These guys were way up here. And the market said, oh, you're completely undesirable. You guys are the biggest losers, down 87%. Hey, thank you, stock market. I think I'll buy it at 80 at this price and then see my investment go up 141% in a little over a year. So get good at that. And then you could have taken 10 grand and turned it into 25 grand in a little over a year. So that's a skill that I would encourage you to learn and try to play in sectors and industries that inherently have more value, that get really exciting. Like investors go, holy smokes, it's a really special company. I think I'm going to run it up really nicely, 300%. Oh, it collapsed, but this company kept growing the revenue. So the market just was like, it's undesirable for the moment. It's unpopular. And I picked it up at a really nice valuation and made good money on DocuSign. And, I would encourage you to use the skill you're developing that I think you're describing with Conagra and point it at maybe some sectors that maybe have a little more potential. Columbus. So you're in Columbus, Georgia, and waking up at noon is a little too early on a Saturday. How late do you stay up? Don't answer that. You don't have to. I don't want to get into your privacy. Sorry about that. HRL? Are we going to talk about another? Hormel. Oh, man. Staple. Guys, you're proving my point without me having to say a word. Do I have to say it again? I don't think so. I want you guys to make a lot of money. You can't make, in my opinion, you can't accelerate your wealth building in industries that just are not building wealth. These industries are just kind of stagnant, just going sideways, kind of valued the same for 5-10 years. We need to find rocket ship rides. We need to find Robinhood. And that's another story where, back to you, like you're trying to find a bounce in the stock. Look at this baby. Okay. Now, the stock market said Robinhood is like a total waste of time, man. Nobody should be buying that stock. We're going to sell it off. We're going to sell it off by 85%, right? From the high to the low. Well, I thought it was worth a lot more than that, so I bought it. Pick stocks in other sectors, not consumer staples. And this is the potential. Like you buy, 10 grand in Robinhood over a year and a quarter. That 10 grand would be worth closer to 50 grand now. So that's where the money's at, in my opinion. And I hope this is giving you ideas. All right. Well, that insider information stuff, that's not my game. My game is fundamentals, as you could see. MFA also holding up. All right, cool. Real Mexican Joker. All right, so you gotta put a nice joke clean in the chat if you got a good one. You saw CVS on my list, you did, and you probably saw that I'm losing money on it. I don't have a big position. I think I own like 10 grand, and I'm thinking of just getting rid of it because the thing's just been healthcare for pharmacy related stocks and health insurers payers like United Healthcare, Elevance. They've just been getting murdered, man. Oh man, I keep making stupid comments, and I'm sorry about that. The CEO of United Healthcare got assassinated, so I shouldn't be using that analogy. Insurance payer stocks like United Healthcare, their stock price have been taken down. Let me correct myself there. Sorry about that. And CVS, I think, has a lot of value, but man, it's going to be a little while before the bad press and the bad feeling about their industry goes away. I'm not sure if I want to wait around, so I may sell it. So I don't have any opinion on CVS right now. It may be off my portfolio soon. George, thanks for joining. Do you have any insight on RadNet? So RadNet. All right, so RadNet, together with its subs, provides outpatient diagnostic imaging services in the U.S. The company operates two segments, imaging centers and artificial intelligence. Whoa, imaging and AI. Woohoo. Its services include magnetic resonance imaging, computed tomography, positron emission tomography, nuclear medicine, I guess chemotherapy, mammography, ultrasound. Okay, cool. Interesting. Healthcare. I guess they're using AI to look at like images and maybe look for certain patterns and then maybe give that data to the professional who's then going to interpret what they're seeing and give you, hey, this is what we think's going on inside your body. Very interesting. Cool. So these guys are a $5 billion market cap company. Revenue is 1.7. The stock has been moving, baby. 100%. 258. Oh, beautiful. Looks good. Forward P is really high. Let's see what their growth rate looks like. Man, their growth rate is not all that impressive. 12%. So just because they started going AI, the market went berserk. Oh my God, these guys are going to take over. Well, maybe, but 12% is not overly impressive. I think I showed you a list of 6 stocks that were all way more impressive than this. Gross profit is 423. What's the percentage on that? Their margins aren't very good. So low margins, low growth. Free cash flow is 94 million. These guys are worth like 2 billion and they're priced at 5 billion. So these guys are, I mean, if they figure out AI and they start growing at 100%, they deserve to be valued at 10, 20 billion. I don't know how much, but right now they're not growing very fast. So revenue tells me this is how customers are buying their product. They're buying more product and more customers are signing up to be their customer. They're just growing organically. 12% is not very good growth. Again, we've seen companies in this stream that are far more impressive than that. But because they said we're going to use AI to look at these images, which FYI is not FDA approved. The Food and Drug Administration is not going to allow that. So they're saying it for marketability, which means that, and it worked, right? Hey, the market's like, oh, you're going to use AI for that? Cool. Hey, your stock's up 100%. It's up 258%. Oh, well, 1 point marketing department at Radnet, but I'm a fundamental investor. I'm looking at fundamentals and I'm not impressed. So it's a big giant pass, but maybe I could start shorting this stock. So I'm going to put myself a note that says, hey, maybe I want to short Radnet, because if the emperor has no clothes, if these guys are just marketing the AI tagline to pump up their price, thank you very much. I'll short the stock and make a few bucks quickly. So we'll see. So that's Radnet. So inflation's coming. Food companies will do better. Maybe. It's not an industry that I like to, invest in, because I don't think there's a lot of upside. All right, so and I'm not sure how to pronounce your handle, but is it CSA, SAC, or SASAC? GNMB. GNMAB. iShares for a bond ETF. Rocket Red Countdown Liftoff. I don't know if I'm looking at the right one. So it was GNMAB, right? Yeah. Yeah, the only thing I'm coming up with is here, so I don't think I'm getting the right one. If you want to give me a different symbol. Which stocks am I shorting? All right. So shorting is really risky. So nothing that I talk about is ever investing advice. But I am shorting Palantir. I bought a put position, NVIDIA, Broadcom, and a couple of others. And the fundamental analysis that I do, right, it tells me, man, this stock's like, right now there's a lot of expensive stocks. I don't think a lot of people are going to argue that. Like, yeah, the stock market's expensive. And I use the same fundamental analysis. And if I find stocks that are way too high, it's an opportunity. And sometimes I lose money. But I did make money on CrowdStrike. I made money on Super Microcomputer, was one of my successful shorts in 2024. Yeah, and shorting is really, really risky. So not for, like, if you started investing a year or 2 or 3 ago, don't, maybe read up on it, understand it. But, after you've been doing it for a long time, maybe try it and limit your exposure, limit your risk. All right, you guys brought it today, man. We got 16 people on the live stream. Nicely done. Nicely done. So Michael Anthony, VTRS trades. Man, if we go to another food company, let's see what VTRS is. All right. So Viatris operates as a healthcare company worldwide. The company operates in 4 segments: developed markets, which is Greater China, ANZ, emerging markets. Okay, so this is healthcare. So am I understanding this right? That they're in China, Greater China. Okay. All right. They're up 16.5%. Very interesting. 5-year down 20%. Okay. This is in US dollars. 14.9 billion, $15 billion of revenue. Forward P is 5. Wow. So the revenue is going down. So we have down revenue. That's a concern. They're also in China, which is a big concern for me, because like healthcare in China, I don't have a lot of knowledge there. But it's a very unique situation. I didn't even know, like, I've never covered this company. So very good free cash flow now. Am I looking at dollars? Yeah, US dollars. Okay, so we have very good free cash flow, and it's been consistent. Gross margins are good. So the one red flag concern is this growth. What's going on with growth? Why aren't you growing? You had a very good year in 21. And the other thing I want to get my head around is, where are these guys located? And so it's a US company, Scott Smith. They're located in Pennsylvania. But they sell insurance that covers China? About us products. So these guys are more like pharmaceutical company. Okay. Got it. So these are the areas that their treatments cover. Okay. The piece that doesn't make sense, it's an American company. The whole one of their principal markets in China. That one's throwing me off. Yeah, they do generic drugs, which means that they get to take drugs that are off patent and then produce them. And then here we go. So total sales. Yeah. They're selling generics and they're selling them in China and they're selling them in Europe. That's pretty neat. Very interesting. Cool. I guess because in the US, the generic business is pretty competitive. It's kind of smart on their part that they're taking these generics over to China. All right, so they're not growing. They're doing about close to $2 billion in free cash, but they're not growing. So they're worth about 20 billion. If you think they're going to grow, they're going to be worth more, but they don't have a successful track record of creating more value for stockholders. So actually, I wouldn't be buying into this company. There's too many question marks. There's too many unknowns. There's a lot of good options in pharmaceuticals right now. They're discounted. You can buy really well-known names. You can buy mid-sized companies. You can buy small caps. There's a lot of good options. And this one is not. This is kind of a okay option. This is a passing grade option, but you can find a lot better options than this in healthcare, in my opinion. Thanks for bringing it up. Brian Silva. It's been a while. So I don't touch airline stocks. I thought I was going to make money on United Airlines, not United Healthcare. And I just don't think airlines will ever be valued in proportion to like their revenues and their profits. Look at this one here, down 23%. Now, when I show you the growth in revenues, you're going to be like, what? How come it's down 23%? So look at this growth. And the stock's down 24%. Okay. So the airline industry is undesirable by many. You have to buy expensive aircraft. You have to hire a lot of employees. A lot of undesirables come up, which is why their PE is 6.5, 5.45. So I stay away from it. So I don't touch airlines. And you can, I mean, the fundamentals are going to look great. You're going to be like, well, this thing's discounted by 200%. Yeah, but nobody's going to want to buy an airline. No stockholder, no investor, no big hedge fund is going to say, oh, we have a hedge fund that focuses on airlines. No, it's been a money losing situation for a long time. Warren Buffett swore them off a long time ago. And I don't touch them. And I just showed you the reason why. Yeah, thanks for bringing that up. VTRS, very unique business. Holy smokes. That was a unique business. Healing with nature. Anyone see Snow Lake today? RGTI. Oh yeah, these guys are in the quantum computing, right? Yeah, quantum computing. Now this, I don't know if it's going to be huge or if it's going to happen next week or in 10 years. I don't know. I'm a Google Alphabet stockholder, so I'm glad that they're really good at quantum computing. But these guys are close to a $5 billion company. Revenue is only 11.89 million. They lose money. They got money losing. They're burning money, burning cash. Like, just doesn't mean anything. They haven't grown any in 5 years. I mean, this is risky, big time. And you might say, well, it had a good month. Holy smokes. Is that right? In 1 month, it went up 675%. Incredible. It went from like $3 to $17. And it's all on the story that, quantum computing is going to be a thing because Google Alphabet had a breakthrough in that they have really gotten further ahead than they thought on quantum computing. But nowhere have I seen that, hey, this company had a big breakthrough. These guys are tiny. And what's probably happening is Rigetti is selling shares because they'd be dumb not to at this level. So they're going to further liquidate the company or dilute the investors by issuing out shares because they want to issue them at a high price, and they're probably going to do that. So this one, even the analysts are saying it's just not worth it. It's a strong buy, but you're overpaying by 72%. No, thank you. Interesting. And I'm not sure what that means. GMAB, GM. Pfizer in China also. Okay. I'm a Pfizer stockholder, by the way. I think Pfizer is going to do well. Oh, cool. RGTI. So we just went over them. No, they're horrible. Their revenue is $12 million. $12 million, like $1 million a month. And they're valued $5 billion. It's like, okay. If their technology was awesome, why aren't they making more money? Why don't they have more partnerships with Microsoft and governments and so forth? And they're making $500 million in revenue. It means their technology isn't really much. And they're in a space where to do quantum, you have to have tons of capital. Like what Google Alphabet's doing with their quantum computer, They put it in this cylinder and they have to hold it at this super low temperature, equivalent to the temperature in space. And that's where this computer has to operate in to keep it from, I guess, overheating. And just the technology and the cost is immense. And for a little company like this to compete, I'm not believing it. I'm not believing it. But other people are. And they're like, oh, well, since they said they're in quantum computing, they're going to be a quantum computing company and they're going to be worth lots of money. So I'm going to buy some shares. And for all I know, they're right, but I'm 99% sure in my mind, my analysis that, yeah, but what if it's not? And it comes back down to $3 a share and you bought it at $14 a share or $17 a share. Then you're going to lose how many percentages? Like 80% of your investment. So no thanks. I think I'll stick to fundamentals, consistently make money year after year. And seeing after hours is dropping 3%. So we'll see what happens. That might be a good one to short. What's the short interest on Rigetti? That would be interesting to look at. Yeah, baby. These shorts are coming in. Coming in hot. Because there's a lot of fluff in this stock, like a lot. All right. Thanks for bringing it up. What about the BTM Bitcoin business? BTM Bitcoin Depot. So this is a small company, $95 million in market cap. They do 585 in the revenue, huh? Why is their market cap so damn low? They're down 30%. So I haven't looked at these guys. So Bitcoin operates network of kiosk. Okay. So they have these like ATM looking machines. I see them in like convenience stores and stuff. And you can go buy Bitcoin. You get this little receipt that'll have the Bitcoin details on it. So you can transfer it to your wallet, transfer it to somebody for payment and so forth. And it's not a business that I'm all that attracted to. I own Coinbase, I own Bitcoin, I own Ethereum. There's 2 other companies that I cover that are crypto based. And these guys are they're like operating vending machines. So it's not all that exciting to me. Revenue's there, but you saw the valuation on the company. It's not very good because it's not a really exciting business. 21% gross margin. No thanks. Free cash flow is low. It's like a vending business. It's, they'd like to ride this excitement on Bitcoin. Were they ever like really exciting? Yeah. See, like investors, like that quantum computing example, investors are like, oh, Bitcoin. And it's really lost money ever since. So no thanks. This is a low value business. That's why the market cap's so low. 18 people on the live stream. This is the highest number I've had all week. Man, Friday night, that's when it all happens. Maybe because I started talking about getting a face tattoo. Made me more of an interesting item out there, huh? 20. We got 20 people on the live stream. All right. Well, keep the requests coming, man. I got an audience. So we went over the hot tips. What else do you guys want to talk about? So Amazon had a pretty good pullback today. I bought into Amazon. These are the stocks I bought more shares in. I didn't buy any more Mercado Libre today, but I bought Amazon. I bought more Robinhood. I bought more Coinbase. I bought more Chubb. I bought more. I didn't buy Citigroup. I didn't buy these because they were up. These are the healthcare companies I was talking about. CPRX and United Therapeutics. These are. Remember how we were like, hey man, well can we find this is within healthcare, biotech. This stock has done well. And it just has terrific fundamentals. It's got it all. Good fundamentals, good revenue growth. They make really good margins. They have patents on these drugs that really work for people. 83.97% gross margin. Beautiful gross margin. They create free cash flow, acquisition target, all these really good things about a company. And they've seen a pullback, in the recent month or so. So this a nice stock that I continue to buy into, as well as United Therapeutics. And I'm looking to buy into Lanthium, which is in this space. Over the 1 year, this one's up 66.44%. Phenomenal. And everything's good about it, good fundamentals, good revenue growth. See these margins? These are desirable businesses. That's why they just go up in value very quickly. So these are two businesses that I'm investing in, and we'll continue to buy shares on pullbacks. Cool stuff, man. Well, all good things must come to an end, unfortunately. And I appreciate everybody's comment. It was fun. It was interesting. I hope you found it interesting. Let me wish you a really nice weekend. Let me just remind you, you can find me and other people that belong to this community on Discord. You can find me on Facebook, Threads. This information's in the details of the live stream. I invite you to be a paid member. $10. You get an invite to the calls on weekends, and you can have different perks at different levels. And I encourage you to consider these. It would be great to have you as part of the paid community. And it'd be great to have you on live streams. So if you want to upgrade to the paid community, that'd be great. All right, everybody. Have a nice weekend. Thanks for tuning in. I appreciate it. And let's see what happens on Monday and Tuesday to close out 2024. See you guys.